Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP 500 view using the E-mini futures contract and put together some action areas and high probability price targets for the trading week ahead. Before we jump into the technical picture, let's just update where we are in terms of market dynamics, market narratives, and the data calendar for the week ahead. We closed last week up by 4.6%. The Nasdaq up 6.4%. Russell up 3.8% as per the Goldman Sachs update here. And we've seen the VIX pull back now below 30. We're currently trading 25.50. So we're seeing a reduction, or at least a near-term reduction in terms of volatility. From a flow perspective, it appears that we are seeing demand come back in for mega cap tech stocks, indicating a positive shift from the Goldman desk anyway, in terms of the supply and demand outlook. Demand elsewhere, driven by coverage needs. They're estimating foreign investors have now sold approximately $60 billion worth of US stocks since March, with European investors leading that selling. In terms of the data that we are looking for this week, attention is really going to be shifting towards the micro side of things with respect to earnings. On Wednesday, we will hear from Meta Platforms, the parent of Facebook, and Microsoft, and then on Thursday, Amazon and Apple. So we're going to get a deluge of those mega cap tech earnings, which are likely to drive flows as we head in towards the back end of this week. And in terms of the macro side of things, it's going to be about jobs, really. We get the jobs data on Tuesday, ADP on Wednesday, jobless claims on Thursday, and then non-farm payrolls on Friday to round out the week. We will also get US GDP, which is a little bit backward looking at this stage, but we will get the Fed's preferred inflation barometer PCE data on Wednesday, Bank of Japan decision on Thursday, no change expected, and we do have elections in Canada, expecting some results there overnight. So in terms of the market dynamics, we are still in that tariff Truth Social tweet updates from Trump. It's been a bit of a weird weekend with respect to him once again attesting to a call with Xi, whereas Bessent, Treasury Secretary Bessent, and the Foreign Secretary Rubio not prepared to confirm or align with that view from Trump. So we're getting some mixed messaging. But the mood music has improved, and there is a potential this week, or we could see it happen this week or maybe next, whereby Trump could pull the 145% tariffs on China, which I'm certain would lead to at least a short-term pop in terms of the equity markets. Market breadth has seen a pretty big improvement, with the stocks trading over their 20-day moving average, finishing last week at 68% versus 27% the week before. Stocks trading over their 50-day moving average has improved slightly to 32% from 24% last week. And stocks above their 200-day moving average also seen a modest improvement there, 33% versus 30% last week. So we'll continue to monitor that. In terms of the volatility, like I say, we have seen a pullback now below that 30 level. So if you use the rule of 16, where a 16 print on the VIX indicates 1% movements over 20-day implied volatility, so we're currently probably trading at about 1.6, 1.5 now. So we are seeing some of that volatility come back. And in terms of the gamma, so the gamma last week ended at minus 147 billion of short gamma position. This is negative 200 plus 200 zone, which dealers have very little to do in terms of the market, which again will help to reduce the volatility that we have been experiencing in these markets over the past few weeks. And you can see that we have an implied move of 2.5% heading into the payrolls print on Friday. So that again is seeing a little bit of reduction in terms of the underlying volatility in the markets. So in terms of the my personal positions, you can see here they are updated above, and you can see my stops, etc., and my profit locks. Essentially, I'm positioned on the long side. I've got some single stock exposure as well as long futures. But I did sell into the Friday close, looking for a little bit of a pullback. Obviously, last week, in terms of the technical update, we got a bullish outside reversal candle, which is a positive signal, and I'd be looking for follow through. But I anticipated heading into the Friday close that we would probably see some corrective action as we head into Monday. So for the week ahead, we are looking at implied market maker volatility for the week in terms of range, resistance, and support. We have resistance coming in at 5,700 and support coming in at 5,400. Now, as we look to the charts, one thing of note here that is worth just paying attention to, something to have in mind, not necessarily actionable in terms of immediate trading opportunities, but this is an overlay versus the current corrective move and the pullback that we saw post-COVID. And you can see we're tracking pretty closely here. We could still see some further upside, but certainly there is the potential as we test higher levels here that we could see another leg to the downside. So just something to keep in mind in terms of an analog to the current setup and structure of the market that we're experiencing at the moment. So let's just remove that now and take a look at the technicals for the week ahead. So for the week ahead, I am using a bull bear zone of 54.82 to 54.92, and using that as primary support for a move higher. What I'm looking for is that we can fill the gap up to the 56.10 area, and if we get through there and continue to find support, then I'll be targeting range resistance for the week at the 5,700. In terms of the daily VWAP and the weekly VWAP is bullish, obviously, as per last week's close, and we have support coming in at 53.68. That's where the market flipped bullish on the weekly time frame. On the daily time frame, we have 53.95. So that also is a key level. I certainly want to keep an eye on those levels if we start to trade meaningfully lower. At this stage, like I said, my primary expectation as we head into this week is that we will engage higher, at least into the middle part to back end of the week. In terms of time framing, on the daily time frame, one time framing up now versus 54.82. Obviously, that coincides with my weekly bull bear zone. In terms of the weekly time framing, we're in a balance area between 55.54 to 51.27, and monthly one time framing, we are still on the downside with 59.97 as the flip there. So like I say, on the weekly, we got that bullish outside reversal last week. On the daily, we are targeting versus the 51.25 swing low. We now have an equality objective up at 58.19, which is the primary upside target, technical target now, as long as we maintain support at that 51.25 level. So let's jump into the intraday charts and look at where we can find some near-term trading opportunities. So for today, what I'm looking for is any pullback into our weekly bull bear zone. I'm watching for bullish reversal patterns there to engage on the long side, looking for a break through the prior cycle highs here at the 55.60s, and we are looking, like I say, to fill that gap up to 56.10. We have the anchored volume weighted average price from the all-time highs coming in there. We have daily projected range resistance coming in at 56.13. So any move into this area as we head into today's session and certainly into the back end of the day, I would look for bearish reversal patterns as an opportunity to trade tactically short for a move back in to retest these prior highs as support, and then we will look for that extension up into our ultimate objective for the week, which is the weekly range resistance at 5,700. The alternative scenario is we fail to hold support into that 54.80. And then what I'd be looking for is an equality objective versus that last meaningful corrective leg before we took off last week, which would see us trade down into the 54.18. Also coincides with the anchored volume weighted average price from the cycle lows that we saw a couple of weeks ago. And so I'd be watching again, bullish reversal patterns there. I want to engage on the long side, and we'd be looking then to grind it out to the upside, looking for that gap fill initially, 56.10, and then onto the 5700. Any loss of 5400 to the 53.80 would be a bearish development, and then we will be looking for a test of weekly, not weekly projected range resistance. We'd actually be looking for a test of the trend channel support, which is now coming in back down into these 53.30s. Note that we do have a gap still open at 53.39. So I'd be looking for any pullbacks again into that area as an opportunity to watch for bullish reversal patterns to engage on the long side. So those are the key levels I'm watching as we head into this trading week. Updates will be provided through the Tickmill blog and into the Tickmill trader chat through Facebook. If you want to get involved there, feel free to drop me an email, patrick.munnelly@tickmillpartners.com, and I can send you an invite to join in there. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.